So we got the 1 year SPX correlation pullback. So the other was a deep pullback. This is using the same correlation with the SPX, but just a pullback. So all of the other things are the same, meaning the correlation with the SPX has to be above equal to 85%. But instead of using state 4, target 2, I'm using state 2, target 3. So we can see here using the two signals, 85% correlated with the SPX over 252 trading days, and my state 2 target 3 has to be met on that day. We went through the correlation already. Here I wanted to show you on 131 is when the signal had come out. Target was 85% correlated to the SPX. You can see on the same day I ran the same screener using the same screener or signal, and we can see target is on this list right here at 85. So just barely met the criteria. Two graphs together, we can see the correlation, and you can see the correlation on this one versus the correlation that we looked at earlier. SPX and then target still fairly correlated. We can see a nice uptrend on both with some dips here at the same time frame. But once we get up to this level in target, you can see, gap up possibly off of earnings or some move around, December, Christmas time, and then starting to come down and starting to come down. So we got a little disparity here and here. So that might be why it's only 85% correlated, but still matches what we're looking to receive for the actual studies test. State modeling, we talked about that on January 31st again of this year. We're looking at target in state 2, and then target actually broke through. It didn't break through our target 3 here or here. It waited 4 more days and then it broke through the target 3 there. A low of 110.37, and our target 3 was actually 112.17. So it broke below on that day, and it was 85% correlated. So the signal had come out. In the studies, you can see it here, January 31st, 1 year SPX pullback long call target, and it shows you 85% correlated with all your prices as well. We want to look at the specific trade where we bought the April 115 call at 375, and then that's when we put that trade on. So now you can see on 131, and then on February 4th, just a couple days later, we were able to get out for that 25% profit or more. We bought the 115 call at 375, and we sold it at 470. And you can see the price of target jumped from 110.74 to 113.25. You got your bull call results here. Similar fashion, 131. We bought the 97.50 115 call spread. Our risk cost at open was 10.90, and then on 2/12, February 12th, we were able to get out for a profit of 296. Stock went from 110.74 to 118.11. Also, I don't know if this was mentioned before, we have the reason over here. So the reason that we got into the trade was the entry date. The signals had come together. The reason we got out was our profit target condition had met. On some of the other ones, I think Josh had shown one before, it'll give you a note of, exit date or option expiration approached or stop loss. It'll tell you the reason here of why the trade was exited, and then you can look at it for further analysis if you want to do so. The bull put results, we can see them here. 131 was the entry. We sold the 97.50, 92.50 put spread. We collected $66 to do so. So you can see my risk, or my profit, excuse me, is a max of $66. But since it's a $5 spread, my total risk is $500 minus my credit. So my risk is actually $434. So we can see that there on 4/14, just right before tax day, you were able to get out, take a little trade, take a little profit, closed it out for $58. So you're able to take the $58 profit. And again, if this risk 434 versus your profit 66 doesn't match up with the type of trading that you like to do, again, customizing those strike selections are going to be crucial to make those adjustments and try to get that risk to reward to match your investing profile. Long call, 58,000 profit, 1.85 profit factor, 76% win rate, average days 22. Nice sloping graph there. Bull call, similar fashion, 2.44 profit factor, 82% win rate. You're in the trade a little bit longer, 29 days, but still nice slope, this dip for COVID. We keep saying that, but that's there. So, and it happened. So bull put, similar, 1.95 profit factor, and we're looking at 88% win rate. 37 trading days you're typically in there on average, but your risk is lower, 661, and you can see we got that dip there as well.